Welcome to the deep dive. Today we're tackling something, well, pretty fundamental to business success. Actually getting to yes in your negotiations. We've really sifted through the essential wisdom of that renowned book, Getting to Yes, to bring you actionable strategies. Things you can use to sharpen your negotiating skills, like right away.
Yeah, whether you're a seasoned pro or, just starting out.
Exactly.
Think of this deep dive as maybe your accelerated learning program for negotiation mastery. We've pulled out the 7 core principles that can genuinely transform how you approach and, importantly, how you close deals.
Right. We're calling it Unlock Yes, 7 Secrets to Smarter Business Negotiation.
Catchy?
We try. So over our chat today, we'll dissect each of these 7 secrets. We'll look at how they actually work in the real world and, crucially, how you can weave them into your own negotiation toolkit.
Okay, so what's the roadmap?
Good question. Here's a quick rundown.
People first, problem second. That's about separating the human element. Second, beyond the ask. Focusing on what really matters, the interests.
The why.
Precisely. Third, imagine more. Crafting options for those win-win outcomes.
Expanding the pie.
Got it. Fourth, fair play. The power of objective standards.
Using benchmarks.
Fifth, your walk-away winner. Understanding your BATNA.
Critical. Your plan B.
Absolutely.
Yeah.
Sixth, turning the tables. Negotiation jujitsu for those tough players.
Handling the hardballers.
Yep. And finally, 7th, from ideas to ink, moving towards solid agreements.
Making it stick.
Exactly. Ready to unlock? Yes.
Let's dive in.
Okay, our first principle, people first, problem second. Now, on the surface, this might sound a little soft.
Yeah.
For the hard world of business, what's the core idea here?
Well, at its heart, it's recognizing that every negotiation really has 2 layers, intertwined layers. There's the substance, the deal itself, the problem you're trying to solve, and then there's the relationship between the people involved. And every negotiator, no matter how tough they might seem, actually has a vested interest in both. They want a good outcome, sure, but they also want to maintain, a decent working relationship, even if it's just for potential future interactions.
Okay, so instead of just jumping straight into the numbers or the contract terms, we need to consider the person, sitting across the table. Why does focusing on that human element actually lead to better business results? That's the key, right?
It is. And think about it this way. Negotiations are fundamentally human interactions. When you treat the other side with respect, when you genuinely try to understand their perspective, you're laying groundwork.
Groundwork for what?
For stronger, more trusting relationships. And that doesn't just make the current negotiators smoother, it builds goodwill for, maybe future collaborations. Plus, by consciously separating the people from the problem, you're less likely to take things personally.
Avoid getting drawn into emotional fights.
Exactly. It keeps things more rational, more objective. And finally, when people feel genuinely heard and understood, they become much more receptive. They're more willing to listen to your needs, your interests. The insight really is that negotiation is often like 50% relationship.
50%? Wow.
Yeah. Invest upfront in that relationship, and you often unlock better outcomes later.
That makes a lot of sense. It's like building a foundation before you put up the walls.
Yeah.
So what happens when we ignore this? What are the dangers of treating the negotiation purely as a battle over the issue?
Oh, the risks are significant. You can easily damage the relationship, and not just for this deal, but for any future interactions too. Emotional reactions, misperceptions, they cloud judgment on both sides.
Leading to bad deals.
Leading to suboptimal outcomes, absolutely. And if the other party feels disregarded, disrespected, well, they're naturally going to become less cooperative, more resistant. It quickly turns into that us versus them scenario, which, let's face it, rarely leads to the best results.
Can you give us some concrete examples, maybe U.S. companies that really get this right, that prioritize the people side?
Absolutely. Look at Zappos. Their legendary customer service isn't just about fixing returns, right? It's about building lasting relationships. They empower their people to actively listen, empathize, go the extra mile.
Creating that loyalty.
Exactly. Huge loyalty. In the B2B space, you see successful long-term partnerships. They're almost always built on mutual understanding and respect. Companies that communicate proactively, understand each other's broader needs beyond just the price, they tend to have much more resilient relationships. And even internally, think about progressive HR departments. They're increasingly using mediation, people-centric approaches to resolve conflicts in a way that actually preserves working relationships, keeps the team cohesive.
Those are great examples.
Yeah.
It shows the long-term value. Now, on the flip side, What are some common mistakes you see from competitors, maybe, who overlook this people-first principle?
Oh, we see it all the time. Think about companies using aggressive, high-pressure sales tactics, just focused on pushing a product, without taking a moment to understand the customer's actual needs or concerns.
Short-term gain, long-term pain.
Pretty much. Leads to churn, negative word of mouth. Or consider companies that treat their suppliers purely as cost centers, just constantly squeezing them on price, ignoring their long-term health, potential impacts on quality.
Risky for the supply chain.
Very risky. And sadly, you also see companies with poor employee relations, ignoring feedback, ignoring concerns, leading to low morale, high turnover, ultimately a less productive workforce.
So for our listeners who want to improve right now, today, what's the key actionable advice for putting people first, problem second into practice?
The most immediate step. Consciously focus on active listening and empathy. Seriously, before you even dive into the substance, take a beat. Try to truly understand the other party's perspective. What are their underlying concerns? What pressures are they under?
Put yourself in their shoes.
Exactly. See it from their side. And frame the issues not as points of conflict, but as shared challenges, things you need to solve together. Like, if a supplier has delivery delays, instead of immediate blame, try understanding their logistical hurdles first.
Build that connection.
Build that human connection. Show genuine consideration. It creates a much more conducive environment for reaching a mutually beneficial agreement. Remember, strong relationships aren't just a nice side effect. They're often a crucial ingredient for success.
Really insightful. Okay, let's move to our second secret. Beyond the ask, focusing on what truly matters interests. Feels like we're digging deeper now. What's the core difference between a stated position and an underlying interest?
Exactly. Digging deeper is the right way to put it. Think of it like an iceberg. A negotiator's stated position, that's the tip you see above the water. Their specific demand, their proposal.
The what?
The what, precisely. But what truly drives that position, their underlying interests, that's all hidden beneath the surface. These are the fundamental needs, desires, fears, motivations. The why behind the what. So effective negotiation isn't just about getting someone to agree to your position. It's about understanding and ultimately satisfying everyone's core interests.
So instead of just trading offers back and forth on those surface things, what's the real advantage of trying to uncover and address those deeper interests?
Oh, several big advantages. Firstly, understanding the why often unlocks opportunities for creative solutions you just wouldn't see otherwise. You can find ways to meet their underlying needs that also align with your interests.
More options emerge.
Exactly. Secondly, focusing on interests can break through those stubborn deadlocks. When both sides are just rigidly clinging to their initial positions, exploring motivations often reveals common ground or potential trade-offs. And thirdly, agreements that actually address the fundamental interests. They're much more likely to stick, to be sustainable, and lead to longer-term satisfaction.
Conversely, what are the negative consequences if we stay fixated on those stated positions and, well, neglect to explore the why?
Well, negotiations can quickly become a zero-sum game, a battle of wills. Each side feels like they have to concede something important just to get a deal.
Leading to compromises nobody really likes.
Right. Compromises that don't truly satisfy anyone. Leaves that lingering dissatisfaction. You also miss out on valuable opportunities for those creative trade-offs we mentioned. You might have something the other side values highly that costs you very little, but you'd never know if you don't dig into their interests.
Blind spots.
Big blind spots. And ultimately, if the agreement doesn't fix the fundamental issues driving each party, well, those problems are probably just going to resurface later.
Can you give us some examples? The U.S. companies, maybe, that are particularly good at moving beyond that initial ask and focusing on deeper interests?
Certainly. Think about a company like Salesforce and their whole value-based selling approach. They don't just sell software features. They invest real-time understanding their clients' core business objectives, their growth plans, their pain points, their underlying interests.
And then they tailor the solution.
Exactly. Tailor the solution to directly address those needs. Or in the automotive industry, you often see manufacturers engaging in collaborative problem solving with key suppliers. Instead of just relentlessly pushing for lower prices.
Which happens a lot.
It does.
Yeah.
But the smart ones work together.
Yeah.
Understand the supplier's cost structure, constraints, innovation potential, finding solutions that optimize the whole supply chain for mutual benefit.
Win-win.
Ideally. And think about companies offering flexible work arrangements. They're recognizing employees have interests beyond just salary, right? Like work-life balance, autonomy, development. and they adapt policies to meet those broader needs.
And what about companies that miss this? Common mistakes they make by staying at that surface level.
A very common pitfall is purely price-driven competition. Companies just focused on undercutting each other without understanding what else customers value.
Yeah.
It's often a race to the bottom, erodes margins for everyone.
Yeah, tough cycle.
Another mistake, that dictatorial approach to supplier relationships. Just imposing terms without understanding the supplier's capacity or needs leads to resentment, maybe lower quality, definitely supply chain risks. And then there are those one-size-fits-all employee policies. Failing to recognize diverse needs and motivations often leads to dissatisfaction, loss of good talent.
So for our listeners wanting to get better, how can they actively shift their focus from positions to interests in their business dealings? What's the practical advice?
The most crucial skill? Become a master of asking why. Seriously. Whenever someone states a position, makes a demand, don't just take it at face value. Probe deeper.
Dig in.
Dig in. Ask about their reasoning, motivations, concerns. What are they really hoping to achieve? What are they trying to avoid? And this is important. Be equally transparent about your own underlying interests.
Share your why.
Exactly. Articulate your needs, priorities, not just your demands. Frame the negotiation not as a battle over positions, but as a joint effort to find solutions meeting everyone's core interests.
Can you give an example?
Sure. If a client pushes hard for a lower price, don't just say no. Ask, why is that price point so important to you? Is it a budget constraint? Are they comparing you to a competitor? Understanding their interests might let you explore alternatives, adjusting scope, different payment terms, highlighting unique value.
Okay, find another way to meet the need.
Precisely. Focusing on interests moves you beyond the superficial to find those truly mutually beneficial outcomes.
Incredibly valuable. Okay, our third secret. Imagine more. Crafting options for win-win outcomes. It sounds like it's about expanding the possibilities before locking in. Tell us more.
Exactly right. This principle stresses the importance of brainstorming, generating a wide range of potential solutions before you start evaluating them, before trying to reach an agreement.
Don't jump to conclusions too fast.
Don't. The idea is to move beyond the obvious. Explore creative ways to meet the interests of all parties. You might even expand the overall value of the pie that you're negotiating over.
Okay, so what are the tangible benefits of taking this more imaginative approach? Generating more options.
Well, first and foremost, it significantly increases the likelihood of finding solutions that truly satisfy everyone's underlying interests. More options mean more flexibility, more creative combinations.
Right.
It also fosters a more innovative, collaborative atmosphere, encourages everyone to think outside the box, contribute to finding better outcomes. And practically speaking, having a diverse set of potential agreements reduces the risk of hitting a complete dead end. You have multiple paths to a possible yes.
And the downsides, if we don't take time to explore, to generate variety, what are we missing?
When you don't actively imagine more, negotiations often get stuck in very narrow either-or choices. You can easily overlook much better solutions neither party even thought of initially.
Tunnel vision.
Total tunnel vision. People get stuck on initial positions, fail to see those mutually beneficial trade-offs where you give something low cost to you but high value to them, and vice versa. And ultimately, the agreement you reach might just leave significant value on the table. There could have been a much better outcome for everyone.
Can you give some real-world examples, U.S. companies maybe, adept at crafting these win-win options?
Absolutely. Brainstorming sessions as a formal process are widely used across industries, generating ideas for products, services, solutions. The key is creating an environment where all ideas are welcome initially. No judgment.
Separate invention from decision.
That's the core of it. We also see joint product development, especially in tech. Companies, sometimes even competitors, collaborating to create new offerings that benefit everyone, expand the market.
Interesting.
And consider venture capital investments, that use of staged funding, where capital comes in tranches based on milestones. That's a creative way to address different risk tolerances, the needs of both investors and founders.
And on the flip side, mistakes competitors make when they don't embrace generating creative options.
One common mistake is just relying on standard off-the-shelf solutions, not tailoring them to the specific context, leads to proposals that aren't compelling, don't fully address interests.
Generic doesn't work.
Often doesn't. Another is defensive posturing, immediately rejecting proposals without exploring potential, without looking for ways to modify them for mutual benefit. And then there's that tendency to focus almost solely on price concessions.
Back to price again.
Always seems to come back to price, doesn't it? But they completely miss opportunities to create value in other ways: service levels, payment terms, future collaborations.
So for our listeners, how can they start cultivating this skill of imagining more in their own negotiations?
First crucial step: consciously set aside dedicated time just for brainstorming potential solutions. And do this before you start evaluating. Separate those phases.
Okay.
Encourage everyone involved to contribute ideas freely, even the unconventional ones. Focus on understanding the shared and differing interests, and actively look for ways to dovetail those differences, where low importance for one is high value for the other.
Find the complementary needs.
Exactly. Consider a wide range of possible agreements, varying scope, duration, even the parties involved. And make a habit of asking what-if questions. Push beyond the usual. Give me an example of what if.
Sure. Say you're negotiating a partnership, stuck on the equity split. Ask, what if we also explored shared marketing resources, or joint tech development, or a different revenue sharing model for year one? Could any of those create more overall value for both of us? Creative option generation is really the engine driving those win-win outcomes.
That's a fantastic way to put it, expanding the playing field. Okay, our fourth secret shifts focus to fair play, the power of objective standards. What's the idea behind bringing external benchmarks into a negotiation?
This principle is all about moving away from subjective opinions, arbitrary demands, and instead anchoring your negotiation in independent, verifiable benchmarks and criteria.
Like what?
Think market prices for comparable goods, industry standards, expert appraisals, legal precedents, even scientific data. By referencing these objective standards, you create a shared framework for what constitutes a fair and reasonable outcome.
So what are the key advantages of using these objective criteria? Why is it better than just arguing about what each side thinks is fair? Well, first and foremost, it lends legitimacy, credibility. When you can point to an external independent standard to support your claims, the agreement feels more justifiable, fairer to everyone.
Increases buy-in.
Definitely increases buy-in and reduces potential future disputes. It also helps depersonalize the negotiation, shifts focus from opinions or power dynamics to a more rational, data-driven discussion.
Makes sense.
And finally, it can be incredibly helpful in simplifying complex issues. Provides an agreed-upon external reference point to guide the conversation, narrow the range of acceptable outcomes.
And what happens if you neglect objective standards? The pitfalls of relying solely on subjective beliefs.
Without objective standards, negotiations can easily just devolve into protracted, often acrimonious arguments. No clear basis for resolution. It can become a contest of wills,
Where the louder voice wins.
or the more powerful party imposes their subjective view. This leads to agreements perceived as unfair, breeds resentment, undermines the relationship long term. Plus, it's harder to justify the outcome to your own stakeholders if you can't point to any objective rationale.
Good point. Can you give some practical examples how U.S. companies effectively use objective standards?
Certainly. Real estate transactions, independent appraisals are classic. Objective valuation for fair market price.
Standard practice.
Right. For employee compensation, many companies benchmark salaries and benefits against industry surveys, market data, ensures they're competitive and fair.
Yeah.
And in commercial contracts, very common to see clauses referencing external criteria, pricing adjustments tied to public commodity indices, service levels measured against agreed-upon industry best practices, things like that.
And mistakes competitors make when they don't leverage objective standards.
One common mistake is arbitrary pricing. No clear justification based on market research or competitive analysis leads to lost sales if overpriced or leaving money on the table if underpriced.
Either way, not good.
Nope. Another is inconsistent negotiation tactics. Demands seem to shift based on the situation, not grounded in clear principles. Makes it hard for the other side to understand or reach a fair agreement. And finally, just ignoring well-established industry best practices in their own operations can lead to inefficiencies, increased risks, putting them at a disadvantage.
So for listeners wanting to bring more fair play in, how can they start incorporating objective standards?
Key is research beforehand. Before you even sit down, identify relevant objective criteria, market data, industry reports, expert opinions, legal precedents, whatever applies.
Like your own work.
Absolutely. During the negotiation, explicitly reference these standards to support your proposals. Don't be afraid to ask the other side for the basis of their claims. Challenge them if demands seem arbitrary or lack justification.
Put the onus on them.
Yes. Ideally, try to agree on the relevant, objective criteria that will guide the negotiation before diving into specifics. Like, if negotiating service price, come prepared with data on average industry rates. Grounding your negotiation in objective standards creates a much stronger, more defensible position.
Our fifth secret gets down to knowing your leverage, your walkaway winner, understanding your BTNA. For those maybe not familiar, what exactly is BTNA and why is it so critical?
Right, BTNA stands for Best Alternative to a Negotiated Agreement. Simply put, it's what you will do if you cannot reach an agreement in this current negotiation. It's your plan B, your fallback.
Oh, okay.
Understanding your BTNA is absolutely fundamental because it defines your walkaway point, the point where you're better off pursuing your alternative than accepting the deal on the table. It essentially determines your power.
Your power in the negotiation. So knowing what you'll do if this deal falls through, what are the key advantages of having a clear, well-defined BTNA before you start?
Several crucial benefits. First, it gives you a clear bottom line. Prevents you from being pressured into accepting an agreement worse than your alternative. Gives you security, confidence.
Peace of mind.
Definitely. Secondly, having a strong BTNA significantly increases your leverage. When you know you have viable alternatives, you're less dependent on this specific agreement. You can negotiate more assertively for your interests.
Right.
And thirdly, your BTNA serves as that crucial benchmark for evaluating any offer you receive. Lets you assess rationally, is this proposed deal better than my best alternative?
And the potential negative consequences if you go in without a clear understanding of your BTNA. What risks are involved?
Without knowing your BTNA, you're basically negotiating blind.
Yeah.
You might feel pressured to accept a suboptimal deal just because you haven't considered or developed other options.
Fear of having nothing.
Exactly. You could easily miss out on potentially better opportunities because you're too focused on making this negotiation work. And you'll likely lack the confidence to push hard for your interests if you feel you have no other recourse. Makes you much more vulnerable.
Can you provide some practical examples how U.S. companies demonstrate understanding and use of their BATNA?
Certainly. Procurement is a great example. A smart company always cultivates multiple potential suppliers for critical goods. That gives them a strong BATNA. They're not beholden to one vendor.
They can switch.
They can switch if terms aren't favorable. Companies looking to expand into new markets often explore various strategies, partnerships, acquisitions, organic growth. If one partnership negotiation falls through, they have other viable alternatives ready.
Diversification of strategy.
Precisely. And in talent management, companies building a strong pipeline of potential hires have a better BATNA when negotiating with existing employees or recruiting new ones. They aren't forced to keep underperformers or accept unreasonable salary demands.
And common mistakes competitors make when they fail to adequately consider or develop their BTNA.
One frequent mistake: becoming overly reliant on a single key customer. If too much revenue comes from one client, your negotiating power plummets. Your BTNA losing that customer is just too painful.
Weak position.
Very weak. Another is a lack of contingency planning. If critical negotiations fail, companies without a strong BTNA can face significant disruptions, operationally or financially. And simply failing to invest the time to research and develop alternatives leaves companies weak, underestimating their own potential leverage.
So for our listeners wanting to strengthen their negotiating position, key steps to understand and develop their BTNA.
First and most critical, actively identify and explore your realistic alternatives before you even start negotiating. Ask yourself, what are my options if I can't reach agreement here? Different deal elsewhere. Achieve goals differently.
Brainstorm alternatives.
Yes. Once identified, evaluate them. And if possible, improve them. The stronger, more attractive your BATNA, the more confidently you can negotiate. Less pressure to accept a subpar deal. And remember, be prepared to walk away if the offer is worse than your BATNA. Knowing your walkaway winner empowers you. It's negotiating from strength.
Our sixth secret is about navigating difficult tactics, turning the tables, negotiation jujitsu for tough players.
Yeah.
This sounds like a strategy for when the other side isn't playing by the same principled rules. What's the core idea?
Exactly. Negotiation jujitsu is a set of techniques for responding effectively when the other party uses hardball tactics, extreme demands, threats, even personal attacks.
Oof, nobody likes those.
Nobody. But instead of reacting in kind, escalating the conflict, you use their force against them, deflect their attacks, redirect the focus back to the merits, interests, options, objective criteria.
I like the martial art. Use their momentum.
Precisely. Use their momentum to your advantage.
So when you're faced with someone being overly aggressive or positional, how does this jujitsu approach help maintain control, steer towards a more productive outcome?
Well, it's incredibly effective at neutralizing those tactics. By not directly countering demands or reacting emotionally, you avoid getting sucked into unproductive fights.
Stay calm.
Stay calm, rational. That often disarms the other party. By consistently redirecting focus to interests and objective standards, you encourage them to move away from rigid positions, engage in problem solving. Ultimately, jiu-jitsu aims to transform an adversarial battle into a more collaborative search for solutions.
And what happens if you don't use these techniques with a tough negotiator? The risks of meeting aggression with aggression.
If you respond to hardball with hardball, you risk escalating, getting locked into a destructive cycle of positional bargaining. You might find yourself becoming defensive, reactive, impairs your strategic thinking, blocks creativity.
Lose sight of the goal.
Easily. And unfortunately, you also increase the likelihood of being exploited by a negotiator who's more skilled or comfortable with those aggressive tactics. You could end up making big concessions just to... One frequent mistake is directly countering extreme demands with equally extreme counteroffers. As we said, just escalates things.
Fight fire with fire.
Yep.
Badly.
Yeah. Another is taking personal attacks personally, responding defensively or emotionally, distracts from the substance, and surprisingly common, failing to challenge unreasonable claims, maybe out of discomfort, avoiding confrontation, but it's often seen as weakness, leading to further exploitation.
So for listeners occasionally facing tough negotiators, key takeaways on applying negotiation jiu-jitsu.
Core principle: resist that natural urge to react defensively or aggressively. Focus instead on staying calm. Ask open-ended questions to understand their perspective. Consistently redirect back to interests, objective criteria, win-win options.
Don't engage on their terms.
When they demand, don't just say no. Ask, why is that important? When they attack your proposal, invite criticism, ask for improvement suggestions. If it gets really tough, suggest a break. Consider a neutral third party. By deflecting positional tactics, focusing on collaborative problem solving, you can effectively turn the tables.
Our seventh and final secret focuses on sealing the deal. From ideas to ink, moving towards solid agreements. What's the key focus in this stage?
This last principle emphasizes the critical importance of translating all that progress, understanding interests, generating options into a clear, comprehensive, mutually agreeable, written agreement.
Get it down on paper.
Get it down on paper, right? It's about thinking about the desired end result, a solid, implementable deal right from the very beginning. Ensuring the process leads to a concrete outcome both parties can confidently commit to.
So why is it so important to actively focus on reaching these solid agreements throughout the negotiation, not just assuming it'll magically happen at the end?
Well, focusing on a solid agreement from the outset ensures all your effort actually results in tangible outcomes. It significantly reduces the risk of misunderstandings, ambiguities, disagreements down the line during implementation.
Avoid future headaches.
Exactly. And perhaps most importantly, by thinking about the final agreement early, you can frame proposals and discussions in a way that makes it easier for the other side to ultimately say yes to clear, well-defined terms.
And the potential downsides, if you don't keep this focus throughout, what can go wrong?
You can end up where you've had productive discussion, maybe even general understanding, but the negotiation just fizzles out. No clear, binding agreement.
All talk, no action.
Pretty much. Vague or poorly defined agreements, they lead to all sorts of future conflicts, disagreements over interpretation, implementation challenges. And if the proposed agreement is unclear, incomplete, doesn't address key concerns, the other party might just hesitate to sign.
Get cold feet.
Right at the finish line.
Can you give examples?
Yeah.
How U.S. companies effectively move towards solid, lasting agreements?
Absolutely. In complex deals, using framework agreements early on is common. Outlines key principles, objectives, anticipated terms, provides a roadmap, ensures critical issues are addressed.
Sets the stage.
It does. Another effective approach: involve legal counsel early. Even draft key sections collaboratively. Helps ensure clarity, identify potential pitfalls, builds mutual understanding of obligations.
Get the lawyers in sync.
Yeah, better early than late. And successful negotiators often focus on crafting yesable propositions. Framing offers clearly, concisely, directly addressing the other party's interests, making it as easy as possible for them to agree.
Make it easy to say yes.
That's the goal.
And common mistakes competitors make when they don't effectively focus on reaching solid agreements.
One frequent mistake: Delaying discussion of key terms, specific details until the very end can lead to last-minute blow-ups on critical issues, derailing the whole deal.
Snatching defeat from the jaws of victory.
Huh, could be. Another is presenting overly complex or ambiguous draft agreements, difficult to understand, hard to feel confident committing to. And finally, failing to thoroughly consider and address implementation practicalities, timelines, responsibilities, metrics, leads to problems later.
So for listeners wanting to ensure their negotiations result in solid, lasting agreements, key takeaways from this final principle.
Start by envisioning what a successful, implementable agreement looks like right from the beginning. Consider not just core terms, but implementation details, the ongoing relationship.
Like beyond the signature.
Way beyond. Don't wait till the end to discuss and draft specific language. Frame proposals as clear, concise, yesable propositions. Address their interests directly. Make it easy for them. Proactively address sticking points. Ensure the agreement is comprehensive, unambiguous. And remember to be persistent in working through details while also staying flexible to find mutually acceptable solutions. A well-defined, mutually beneficial agreement is, after all, the ultimate goal.
And with that, we've reached the end of our deep dive into the Unlock Yes, 7 Secrets to Smarter Business Negotiation, drawing from that timeless wisdom of getting to yes.
Great stuff.
We truly hope this has provided valuable insights, practical strategies you can start applying immediately. Remember, mastering these principles, well, it's an ongoing process, right?
Absolutely. Takes practice.
But the potential stronger relationships, more innovative solutions, ultimately more successful outcomes, it's immense. Thank you for joining us on the deep dive.
Now, here's something to think about. Out of these 7 principles we discussed, which one feels like it could have the biggest immediate impact on your current negotiation style?
Good question.
And what small, concrete step could you take, maybe even a day, to start applying that principle in your very next business interaction?
Powerful questions to reflect on indeed. Thanks everyone for tuning in to the deep dive.
Welcome to the deep dive. Today we're tackling something, well, pretty fundamental to business success. Actually getting to yes in your negotiations. We've really sifted through the essential wisdom of that renowned book, Getting to Yes, to bring you actionable strategies. Things you can use to sharpen your negotiating skills, like right away.
Yeah, whether you're a seasoned pro or, just starting out.
Exactly.
Think of this deep dive as maybe your accelerated learning program for negotiation mastery. We've pulled out the 7 core principles that can genuinely transform how you approach and, importantly, how you close deals.
Right. We're calling it Unlock Yes, 7 Secrets to Smarter Business Negotiation.
Catchy?
We try. So over our chat today, we'll dissect each of these 7 secrets. We'll look at how they actually work in the real world and, crucially, how you can weave them into your own negotiation toolkit.
Okay, so what's the roadmap?
Good question. Here's a quick rundown.
People first, problem second. That's about separating the human element. Second, beyond the ask. Focusing on what really matters, the interests.
The why.
Precisely. Third, imagine more. Crafting options for those win-win outcomes.
Expanding the pie.
Got it. Fourth, fair play. The power of objective standards.
Using benchmarks.
Fifth, your walkaway winner. Understanding your BATNA.
Critical. Your plan B.
Absolutely.
Yeah.
Sixth, turning the tables. Negotiation jujitsu for those tough players.
Handling the hardballers.
Yep. And finally, 7th, from ideas to ink, moving towards